Hi, this is Charlie giving you Monday's market commentary, and I hope you're very well. We're starting off with a daily chart of the S&P 500 here because the S&P 500 is edging ever closer to the all-time highs. It's at 1551. All-time highs in 2007 were 1576, I believe. So it could even get to those all-time highs this very week, for all we know. There's no reason why not, and so we'll see about that. The doomsayers have been cooling this market down, even as it's been going up, so that's always a good sign. But we'll see. We'll see if it happens this week or not. But certainly we don't want to stand in the way of it at this stage. Okay, right. To start off with, then, before we go into any more commentary, here's a dilemma for you. I had a chat with my youngest sister yesterday, and now many of you who've been with us for many years know that I've traded an account for her in the past, several years ago. I think it was about Christmas time. I did that several years ago, and she's always had an interest in the markets. But yesterday, I'm on the phone to her. She said, "Yeah," she said, "Laura and I, that's my other sister, we've been having a chat lately, and we were thinking about approaching you to ask you if you could maybe train us because we want to do some trading on the side, sort of thing. Haven't got a lot of time, but may want to do something on the side and learn over a period of years, and we just wanted to sort of see if we can get into it and make some money from it." So here's the dilemma. Firstly, how do I go about doing that? So answers on the blog site, if you will. Any suggestions as to what sort of thing you think that would be good for me to do with them? Because I said to them, look, I said, for the amount of time you've got available to you, which is not a lot, maybe an hour a week or something like that. You haven't got a lot of time to learn. They can learn with me. I could shoot over there and train them for a day, but they're pretty much on their own, and they haven't got a huge amount of time. So what would you suggest? I know what I would suggest, as far as it'd have to be obviously swing trading, some sort of swing trading, but they still need a lot of time to learn. So, and they haven't got big accounts either. They're only going to be starting off maybe with a couple of £1,000 or something like that. So very small accounts as well. So any advice, any tips or anything like that you want to put down, then I shall gladly reply to those on the blog, and we'll see what we come up with. But yeah, it was an interesting conversation because I said, well, you know, that for the amount of time that you've got available to you, and you're brand new really to it, you don't know anything, you have to accept that it's going to take you a good couple of years or so before you really start to build any experience. So it'd be interesting to see what you guys suggest as well. Okay. So yes, I may be getting myself into something there and end up having many conversations on the phones, I think, because they don't have the luxury of being in our trading room or anything like that. Okay, right. So yeah, so this is the S&P. We'll see what happens there. Now let's go to the Dow, because the Dow's already there, isn't it? The Dow's already broken some new highs. Let's see. So yeah, the Dow broke literally this week to new highs, and so it is already there. The one thing we've got to have a look at again is this. If we can put the comparisons up, let's put T2108 up again, and actually let's put the T2107 up as well, so we can get a gauge as to now both of these you can see peaked back in January. Yeah, both of them peaked back in January. The stocks above the 200-day moving average has been fairly. It's not dropped off that much at all. The 40-day moving average line here has dropped off a bit, so the number of stocks that are trading above their 40-day moving averages, even though the stock market indexes have moved higher, the number of stocks that are trading above their 40-day moving averages has actually dropped a bit. It's lower here than it was back in January. So the underlying breadth of the market has weakened a little bit. That doesn't mean to say that the market can't go higher on slightly weaker breadth. This could catch up. But what we'll be interested in is when we get to the all-time highs, when we get up there. I'm sure we're going to get there on the S&P as well. It's going to be a case of where is this indicator going to be at that stage. So we need to keep our eye on that over the coming weeks. And let's have a look at the Nasdaq as well, because the Russell's already done it as well, but the Nasdaq is lagging. So if I can find the Nasdaq on my list here, there it is. Now the Nasdaq, this is a daily chart, but if we go out to the monthly charts, and we can get get an appreciation of where we are relative to 2007. Actually, the Nasdaq isn't lagging at all. I don't know what I'm saying there. The Nasdaq has already breached its 2007 highs a long time ago. So, but it's lagging in that if we go to a weekly chart, it's not broken its highs from last year, from September. So it is lagging in that respect. But at the same time, what I find is the Nasdaq tends to lead on the downside, but sometimes can drag its heels a little bit on the upside. And when you put it into perspective, remember that if we take this out to a quarterly chart, then the Nasdaq still has yet to reach its all-time highs back in 1999 to 2000. So it's lagged throughout the whole of the rallies over the last 13 years in that respect. So the upside always tends to lag a little bit, but it'd be nice to see the Nasdaq at least punch up a bit higher as well. But certainly still a bull on these markets, been a bull since 2009 generally. When I say generally, obviously there's short-term bullish and bearish, but bull since 2009. For those of you who've been around since then, know that I went into the market in January 2009, I think it was. Might have been to December of 2008. I was about 3 or 4 months early, but yeah, it was. That was a good time to be getting in. And when you see Warren Buffett going in with his own money and some of the other big famous long-term fund managers going in with their own cash, then you know it's probably a good time to go in. Okay, let's go and have a quick look at the currencies, and then we'll wrap it up. So first of all, let's have a look at the pound. Now the pound has just continued its descent actually here on Friday's non-farm payroll news, and so it's come down. I thought it was going to go higher. I had a couple of longs over the past week. I had a lovely one here on from this day going into this day. Had caught a really nice amount of points there. Then I had a couple of other attempts on subsequent days, and both of those rolled over and failed, and so on a swing basis. But we'll see what happens over the coming week. But it's dropped again, so we'll have to see. But I'll be watching my indicators for when we turn again, and at some point we will. If we diverge again, then I'll be looking at those, because I still see this same old pattern. We've come outside the trend channel, and at some point we'll want to come back into that. Now, one thing I may want to do at the moment though is probably draw on another trend channel. So let's just do that. Let's see if we can draw some lines on here. Okay, so we have got another channel in place at the moment, so I've just drawn it on roughly at the moment, but you get an idea of where this channel is. So if we carry on descending, then you're going to be looking towards this lower trend channel line as well on the daily chart, so I would encourage you to put that one on as well. So there's quite a bit going on there at the moment with cable. Obviously at the moment trend remains down. I thought it would was on the turn last week, but it didn't. It just came up, kissed the trend channel again, and it's reacted away from it. So at some point we'll be watching for that to come back in. And it's the same with this channel, the steeper channel that we're in. Any trend channel at some point we will break, but in the meantime we'll just watch it as it plays between that. Now let's go and have a look at the euro, because the euro dollar is obviously going to be of interest, because this one I've always said, if we zoom out slightly, that there was more potential downside I felt on the euro dollar anyway. And so at the moment all we've done is come back into prior support zones, but I do see the potential at least for more downside on the euro. Having said that, we've got a trend channel here on the euro, and at some point if you've got a sloping downwards trend channel, then at some point it'll want to break out to the upside, much like this trend channel. I can take that old line off now. That one we broke to the downside, so at some point it will want to, but it depends on from whereabouts. But for now it's playing within these boundaries, and watch the trend channel lines, watch the lower one and watch the upper one. Right, that's it for now. Have a fabulous week. Kim will be back in touch on Thursday.